Today is Tuesday, September 5th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan,
Yes.
What are the most market-moving reports that traders will be looking at this week?
Okay, well, first of all, on Wednesday, we'll have the August Purchasing Managers Index composite. That's expected to be 51. So keep in mind that 50 is the line of demarcation, more or less, from expansion to contraction. So 51 puts us just a little bit above expansion. And then on Wednesday at 1 o'clock, we'll have the Fed's Beige Book. That's produced in advance of every FOMC meeting, and it is a book of anecdotal evidence of what economies have done throughout the 12 Federal Reserve districts. Thursday jobless claims gets to 238,000, and then Friday, July consumer credit at 2 o'clock gets that up 18 billion.
Now, looking at the U.S. dollar, what is your price outlook for the greenback?
Well, right now I'm looking for continued strength, and I think we'll test the March highs of 105.85. In fact, that was March 9th that we hit that level. Now, what has really happened is, even though there are signs that the U.S. economy is slowing, there are additional indications that economies elsewhere in the world are slowing even faster, especially in the Eurozone. So almost by default, the dollar index will probably outperform other currencies, especially the European currencies. So interest rate differential expectations have and will continue to favor the U.S. dollar. So higher prices, I think, are in store.
Lastly, Alan, looking at the stock market, can you share with our viewers what the technical analysis is telling us about the stock market currently?
Okay, well, last week we did see a breakout to the upside with major downtrend lines taken out. Although we're a little bit lower today, I think that we'll probably see some recovery this afternoon. Also, I think we'll probably see higher prices later this week for stock index futures. And the one thing that has improved is the fundamentals going along with the technicals, that it appears that the Fed now is likely to be less hawkish going forward. So we do have the fundamentals improving and the technicals improving also at the same time.
Thank you, Mark. Let's look at the grain markets. There's still plenty of attention on the war in Ukraine, the Black Sea region. Will failure to renew or extend the Black Sea grain deal have much impact on wheat prices?
Well, with all three classes of wheat hovering at or near two-year lows, it sure doesn't feel like it. Recently, the Ukrainian Grain Association raised their grain and oilseed production forecast 3.7 million metric tons to 80.5. That's actually up 9% from a year ago on favorable yields. They also feel they'll have enough supply to export up to 50 million metric tons of agricultural goods in the 23-24 marketing year. So that's just over 4 million metric tons per month. Exports in August through the Danube River ports likely will reach the July levels at 2.1 million metric tons. So they have a lot of work to do to reach this lofty goal. But Ukraine and the market, for that matter, appear confident that these objectives can be reached. Meanwhile, Russia just continues to be the global leader in wheat exports, with several of these transactions being directly negotiated between governments at prices well below their stated floor of $270 a metric ton.
Mark, looking at the soybean prices, are prices accurately reflecting the impact of the late season heat and dryness on the crops?
I really don't think so. Prices, they've been on the defensive since last Monday's crop progress and condition report, where we saw only a 1% drop in good to excellent for the soybean crop. Expectations were for a much bigger decline. Given the continued late season drought and extreme heat, I'm back thinking we're going to see 2 to 3% drop this week, possibly more. Late season moisture, it matters when it comes to filling out soybean pods. And this year we're seeing considerable amount of late season stress. And I think it's taken its toll on yields. I wouldn't rule out final production being 50 or even 100 million bushels below the August estimate from the USDA, and that would place the U.S. in a pretty tight rationing situation. Stocks-to-use ratio is already very low at just over 5%. And under this scenario, I think spot soybeans will be back above the $14 level, with November possibly challenging its contract high of $14.48 from last spring.
That wouldn't be surprising. Lastly, Mark, how will the late season weather impact corn production?
Similar to soybeans, not helping certainly. However, I'd argue its impact will be less pronounced than what will be on beans. Best guess at this point is corn production will come in very near the 15 billion bushel figure. That's down about 100 million from the August estimate from the USDA. And but with this lower supply, I think this can pretty easily be offset by lowering some of the demand numbers that we're seeing. That would keep U.S. ending stocks at the 2.1 to 2.2 billion bushel figure. Corn usage for ethanol production was disappointing for July. I think that will add to old crop ending stocks carried into this new crop year. Well, new crop export sales, they've been weak. We're down 16% from a year ago, and the USDA is forecasting a 26% increase. So it's early, and a lot can change between now and throughout the next marketing year. But to me, right now, corn looks to be sitting in a trading range about 460 to 520.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.